Thank you for joining us. Welcome to Business Incorporated. I'm Chimeze Obi-Iwawo. Nigeria's FCMB announces a sharp decline of 79% in net profit to just 4.7 billion naira for the 2015 financial year. African Development Bank agrees to lend Zambia $125 million on concessional terms. Plus, Iran may attend talks with fellow OPEC members and Russia in Qatar next month without joining their proposal to freeze crude oil production. We'll begin with the company news here in Nigeria. Listed commercial lender FCMB has announced a sharp decline of 79% in net profit to just 4.7 billion naira for the 2015 financial year, against the sum of 22.1 billion naira reported in the same period of 2014. In a statement released to the Nigerian Stock Exchange on Wednesday, the Tier 1 lender with significant exposure to oil, gas and power sector loans plans to pay a cash dividend of 10 kobo to shareholders. FCMB gross earnings came in slightly higher at 152.5 billion naira, but pre-tax profit a major decline from 23.9 billion naira in 2014 to a mere 7.7 billion last year. About 4 Nigerian lenders have declared profit warnings for 2015 financial year, including FBN Holdings, Skybank, and Ecobank Transnational. And there are indications that Iran will attend talks with fellow OPEC members and Russia in Qatar next month without joining their proposal to freeze crude oil production. Reports say Iran's oil minister Bijan Namdar will attend the discussions in Doha on April 17, but that Iran will maintain its policy of regaining market share lost during years of sanctions, so won't accept limits on its output. Most OPEC members, including Saudi Arabia, have said they will go to the meeting. Iran's attendance means all 13 members of the Organization of Petroleum Exporting Countries, except Libya, are scheduled to take part in the freeze talks. Federal Reserve Chair Janet Yellen says the U.S. Central Bank should proceed cautiously as it looks to raise interest rates again because inflation has not yet proven durable against the backdrop of looming global risks to the U.S. economy. In her first comments since the Fed decided to hold rates steady 2 weeks ago, Yellen again sounded cautious tones about threats to the recovery of the world's biggest economy, appearing to push back on more hawkish recent comments from a handful of her colleagues.
Developments abroad imply that meeting our objectives for employment and inflation will likely require a somewhat lower path for the federal funds rate than was anticipated in December. Given the risk to the outlook, I consider it appropriate for the committee to proceed cautiously in adjusting policy. This expectation of fading headwinds and a rising neutral rate is a key reason for the FOMC's assessment that gradual increases in the federal funds rate over time will likely be appropriate.
Janet Yellen, Federal Reserve Chair. Now, markets in Asia were largely in positive territory today after U.S. Federal Reserve Chair Janet Yellen said the Fed should proceed cautiously before raising interest rates. China's benchmark Shanghai Composite was up 2.59% in afternoon trade. Hong Kong's benchmark Hang Seng Index was up 1.71%. Analysts say Ms. Yellen's remarks had improved investors' appetite for risk. Elsewhere, stocks in Australia were higher after touching a near one-month low on Tuesday, while South Korea's Kospi Index also finished the session in positive territory, up 0.36% to 2002.14. However, Japan's Nikkei 225 was the one major index in negative territory following disappointing official industrial output numbers. Well, from Asia, we move to the European market. Ulrich Bart's DWTV Channel's TV correspondent joins me now from the floor of the Frankfurt Stock Exchange. Good afternoon, Ulrich. Thank you for joining us. Good to see you again today.
Yeah, thanks. Pleased to be with you again.
Right. Now, the chair of the Fed, Janet Yellen, spoke yesterday about the U.S. economy, and her remarks were well received in the markets. And of course, the after effects are being felt today as well. Tell us what investors are so pleased about and how the markets are performing today.
Yeah, the markets across Europe are following Asia up. The Nikkei was down, yes, in Japan, but all the major markets here in Europe are up, whether you look at London with the FTSE or France with the CAC 40 or Switzerland. And here in the DAX, you can see the curve behind me. It doesn't quite show how much the DAX is up because it's been up in a steady way throughout the session. So the curve doesn't look as steep as some of the share price gains in effect are. Investors are pleased that it sounds to them as if the Fed is not going to raise rates in April. Until today, that was taken as a reasonable assumption, but to investors here, to analysts, they say that Mrs. Yellen made quite clear that she sees a lot of risks and that she's taking her foot off the accelerator a little bit. And she also mentioned that if need be, the Fed would be able to stimulate in a major way the economy. And so that people perk up their ears. And so let's say the diminishing chance of an interest rate hike in the United States and possibly less a cumulative interest rate hike throughout the year, that's seen as good news for equities.
Now, Janet Yellen's remarks also strengthened the Japanese yen and the euro. What effect is that having on the equities?
Yes, it's an effect that today is largely being ignored here in Europe. The euro is up over $1.13, and the yen is also, or was also up against the dollar, because, of course, if the Fed waits with an interest rate hike, the dollar becomes just a little bit less attractive. Now, the stronger yen, not good for all those exporters in the Japanese market. And we know from past corporate reports within the last couple of months that when the yen weakened, that brought major profit gains to companies like Toyota, for example, the automaker. So when the yen strengthens, it could have an opposite effect. Not good news on that side for investors, but really only hitting the Japanese market today, not Europe.
Right, let's look at the company news coming into your market today. Germany's largest retailer, Metro, came out with a surprising bit of news. Now, the company plans to split itself up, and of course, the traders are loving it. Tell us more.
They're loving it to the degree that the share of Metro is rising by up to 14%. Rising is understated. The better word would be shooting up like a rocket into the sky. This is good news for investors because they see that finally Metro is doing something. Investors have been displeased with the performance at Metro. There have been several sore spots. The food retailing side, Real, is a word that we know here in Germany, but also in other countries as well. Metro is active worldwide, more than 220,000 employees worldwide in about 30 countries. And it also has a consumer electronics arm. That division is doing well in sales. It's the big one here in Germany. But investors criticized always that it missed the boat on online sales, on the internet business. A little bit ironic because so much of the material that's being sold in the stores is linked to the net, whether you look at modems or computers or smartphones. But that was a sore spot. And people now think that with the company split up, food, cash and carry on the one side, and consumer electronics on the other, they can better focus on improving their business.
All right, Ulrich, thank you very much for your time. Do enjoy the rest of the day. African Development Bank agrees to lend Zambia $125 million on concessional terms. After the break, do stay with us.